Good morning, ladies and gentlemen, and thank you for honoring us and attending this virtual presentation of the Industrial Development Corporation's annual results for the year ended 31 March. On this day, before we kick off, it is with a somber note that we take this moment to acknowledge the people of Charlesville and Jagersfontein for the unfortunate disaster that's afflicted them. We hope for a speedy response, but also recovery for that town. I'm welcoming you from the head office of the Industrial Development Corporation this morning. But before we get started, permit me to also just give you some protocol rules for our engagement this morning. Please, for the question and answer session, please look out for the chat functionality on the top left of your screen. And if you do have connectivity challenges, please refresh and rejoin us. But at this time, our program for the day will be interactive to the latter half of the afternoon of the session itself, for our question and answer session. We do have guests for this particular morning, but key notes to take away is that this morning we will publish the IDC's annual results on the Johannesburg Stock Exchange news service. The integrated report and the financial statements will also be available from the IDC website. Our program features Minister Patel, the Minister for Trade, Industry and Competition. We do have the IDC chairperson, Ms. Busi Mabuza, the CEO, T.P. Nchocho, and the CFO, Isaac Malevu. Following the presentation, we will invite you for an interactive question and answer session. So we do invite you to not only list the company that you're with, but also your specific question for answering. But at this time, please permit me to invite the chairperson of the IDC, Ms. Busisiwe Mabuza, to kick off with the welcome remarks and our proceedings. Thank you.
Thank you so much, Tsepo, our program director for this morning. Honorable Minister Ibrahim Patel, Minister of Trade, Industry and Competition, our stakeholders joining us virtually this morning, members of the media, board members, I know a number are joining us on the virtual platform as well. Our CEO, of course, Mr. T.P. Nchocho and his executive team and staff. Thank you for joining us this morning as we announce the IDC's annual results and report back on the corporation's performance for the period ended 31st of March 2022, a period where the operating environment was characterized by consumer and investment sentiment, somewhat recovering from the historical lows that we saw. In this context, the corporation regained momentum in the focused support of industrial initiatives and the continued drive to, of course, enhance our developmental impact. The easing, you may recall, the easing of COVID-19 restrictions and the improving conditions that we saw in the international environment were comparatively supportive for most of the financial year. South Africa's overall fixed investment activity lifted to a degree, although still falling short of the pre-pandemic levels in real terms. The relatively muted business and investor confidence levels, as well as the subdued domestic demand, were compounded by surplus production capacity that we witnessed across a number of industries, resulting, of course, in the constrained fixed investment that I referred to earlier. Such environment naturally demanded that the IDC plays a prominent role in catalyzing activity. The IDC approved on balance sheet funding of 16 billion rands and disbursed 7.2 billion rands during this financial year. These figures underscore increased activity compared to the prior period. It also underscores jobs saved, some jobs created and catalyzed. It signals the support of businesses, new and existing, and opportunities created for the expansion of productive capacity. Furthermore, the organization's commitment to the transformation agenda was evidenced by the continued support of Black industrialists, Black-owned companies, women and youth entrepreneurs. I'm proud to indicate that 6.6 billion rands was committed in support of transformation funding, which would talk to these categories that I referred to. 1.5 billion rands was disbursed by the corporation from the Post-Unrest Business Development Recovery Fund, an initiative led by the DTIC. Dedicated teams and approval mechanisms were set up to ensure that we're responsive, thus enabling swift intervention and delivery when and where it mattered the most. This initiative benefited immensely from the strong leadership of our line ministry and the commitment shown by those employees and leaders who dedicated hours to ensure effective response. In line with our developmental mandate, we continue to support business partners in distressed industries, such as tourism, of course, and those faced with persistent, difficult economic trading conditions. Our non-performing loan and impairment ratios remained high, therefore, although showing some signs of improvement in the year under review. That said, we believe that management has set the corporation on the right path to support our business partners in a manner that ensures that these high impairment levels are reversed and accounts return to a position of good standing. Referring now to our corporate plan for the period ending March 2025, which cements our commitment to employment creation initiatives, including support for industry master plans, support for township economies, as well as, amongst others, the implementation of the Social Employment Fund and a presidential initiative. The corporation is also working to enhance its role in abating the carbon footprint of the South African economy through our involvement in green economy initiatives, such as the Green Hydrogen Initiative. This demonstrates our commitment and embrace of the opportunity to contribute to our national ambitions for cleaner energy in recognition of the imperative to meaningfully contribute to economic, social, and environmental sustainability. Through business partnerships, ladies and gentlemen, the IDC is determined to improve our engagements with the rest of the continent. We aim to leverage opportunities emanating from the path towards the full implementation of the African Continental Free Trade Area. We remain, of course, attentive to any adverse global developments, some of which continue to have a negative impact on the domestic economic and trading environment. We're cognizant of the challenges and risks to the local economy, including the lack of reliable and cost-effective electricity supply, the outages that we witnessed, transport and logistics challenges, and rising logistics costs, amongst others. The IDC's strategies, plans, and initiatives will seek to assist in redressing some of these challenges, and we want to intensify the implementation of our strategic initiatives aimed at driving industrialization. As the country embraces the road to recovery and finds new forms of ways of improving our economy, the IDC stands ready to partner in the growth and development initiatives. As I move to concluding, I must extend my and the board's appreciation to the Minister of Trade, Industry and Competition, who we'll hear from soon after I conclude. Minister, thank you for your continued support thank you for your guidance, and thank you for the dedication that you demonstrate for the IDC. Through that, we recognize the importance of this institution in implementing government's industrial development interventions. I acknowledge our CEO, Mr. T.P. Nchocho, and the entire IDC team for the commitment shown to delivering on our mandate. Appreciation also goes to our stakeholders, be they business partners, funders, clients, and everybody who continues to choose the IDC as a partner of choice in their economic endeavors. I would be erring if I didn't extend my personal appreciation to my colleagues on the board for their dedication, wisdom, and counsel. Ladies and gentlemen, at this point, please allow me to hand over to our shareholder representative, the Honorable Minister of Trade, Industry and Competition, who needs absolutely no introduction. Minister Patel, over to you. Thank you.
Well, thank you very much, Chairperson. Good morning to you, to the board members who are with us. Good morning to T.P. Nchocho, the CEO, the management and the staff of the IDC. May I also greet and recognize the Director General of the DTIC, Shabir Khan, members of the media, ladies and gentlemen. It's a pleasure to be here today at this release of the IDC results and to congratulate the corporation on an improvement in its performance compared to the previous year. Over the past year, the IDC operated in a global and local environment characterized by economic recovery, albeit with notable levels of uncertainty, volatility, and complexity. The prior financial year, the first of the pandemic period, had seen a significant blow to South Africa's growth rate and the performance of companies in the IDC portfolio, and this of course affected the balance sheet of the IDC. These were extraordinary headwinds that affected the IDC and that the IDC had no control over. As shareholder representative, I agreed to the IDC reducing some of the targets originally set for direct funding in order to provide the corporation the space for its financials to improve. By the time the last financials were released about a year ago, we had already seen the beginning of that improvement. In the period under review, I'm happy to say that the balance sheet strengthened further, and there was an improvement in its approval of industrial funding to clients. As the financial results that the CEO and the CFO will take us through will show, during the past financial year, the IDC's balance sheet and finances had improved significantly, with the asset base increasing by 18% from just over 133 billion rand to about 158 billion rand. This is at the mini group level, and we've seen a general improvement across several financial metrics, including an improvement in the non-performing loan ratio, which has gone from about 40% to about 31%. And all of this performance has been off the back of very helpful tailwinds affecting the IDC portfolio, and it's really welcome. I want to stress this because it's important, as the IDC can do more with a strong balance sheet, and the economic context requires a bigger contribution to growth and job creation. And we always need to be able to do what we do for the economy using the available capacity of the corporation. Chairperson, last year, government requested the IDC, together with other entities like the NEF and the DTIC, to provide support to businesses affected by the July 2021 unrest in parts of KZN and Gauteng, and more recently, the devastating KwaZulu-Natal floods that took place in April this year, which damaged regional businesses and key transport and logistic infrastructure. the IDC set up a business recovery fund that supported companies and communities affected by the unrest. It approved 96 transactions to the value of about 2 billion rand and has disbursed 1.5 billion rand of that to date. This has assisted businesses which employ about 20,000 workers. The establishment of these funds required a different approach to doing business, both at the IDC level, but also within government more broadly, which in turn significantly increased efficiencies and accelerated turnaround times. The IDC will be taking some of these lessons to heart for all of its future programs, helping to build a more nimble, a more agile institution. In the review year, the IDC experienced some positive outcomes. They are shown in the performance for the year as the economy started to recover from the pandemic. The IDC is beginning to rebuild its pipeline, that investment pipeline, and this is critical as a prelude to improving disbursement. The organization realized improvement in lending and investment activities with increased approval levels of 16 billion rand in this past financial year. And I want to contrast that with 6.5 billion rand in the previous financial year. Disbursements of IDC funds increased by 16% from 6 billion rand to about just over 7 billion rand. Now, the good news is this is a step up on the previous financial year. I must note, however, that it is still significantly below the levels required for the IDC to play a meaningful role to foster stronger economic growth and meet shareholder expectations. And it points to the need for the corporation to tool up to play a robust counter-cyclical role in the economy. It's precisely at the time when traction decreases in the economy that we need to see the impact of an institution like the IDC. I'm happy to say that the increased funding activity had a positive impact on development outcomes for this past financial year compared to the previous one. The corporation's impact on jobs for committed transactions in its core activities. So if I exclude what was done during the unrest period, which was really an attempt at a quick injection of resources to stabilize businesses, excluding that, in its core activities, job numbers increased from 2,200 to about 6,300. It's positive, though it's modest. While the work on the post-unrest business recovery was an important contribution, the IDC's core investment activity outside this program has not yet been able to yield the industrial and jobs impact that is required to make a meaningful contribution to lowering unemployment and to grow the economy. I know that TP and the team is seized with this. They recognize this problem and they are addressing it. The corporation will need to focus on this area, therefore, with greater effort across the key sectors, particularly labor-intensive industries. It's also a cause of concern that the number of people employed in key sectors in which the IDC is active has shrunk, although the employment levels of the IDC portfolio expanded by 3%. So we've got to think through and worry a little bit about the wider ecosystem because that is a key metric of our success in creating jobs on scale and in a sustainable way. Funding facilitated for transformation total 6.2 billion rand against a target of 8.1 billion rand. Black industrialists are contributing significantly to the South African economy. We see jobs, industrial output, and increasingly exports by firms that are owned and run by Black South Africans. And the IDC's role as a partner, as an enabler, and as a financier can be stepped up further. We must do more to assist young entrepreneurs to enter the market and to create jobs, and where they are in the market, to assist them to scale up. The work of the DTIC and the competition authorities have pointed to the high levels of concentration in the economy. And this requires coordinated efforts to open the economy for new businesses and provide young entrepreneurs with those opportunities that I referred to. I have requested the IDC in the current financial year and beyond to coordinate its investment actions with the other measures by government to build a more inclusive economy. Our long-term growth is going to be boosted by greater inclusion, but social stability itself, which is a necessary factor in ensuring strong investor sentiment and confidence in the market, will be boosted by greater levels of economic inclusion. While I'm encouraged by the improvement in the approval levels to date, the monies that the IDC is allocating to projects, the real impact on the economy is when the funds flow to client businesses and we have the resultant increase in jobs and growth. And that's measured by the disbursement levels. And that's not yet a good news story. The corporation will need to ensure that the improved level of approvals translates into higher levels of disbursements to make a meaningful impact in the economy. And this will require proactive measures by the IDC to build a strong pipeline of investment, to cut red tape, and to ensure staff of greater assistance to clients. We must improve our outward-facing services. And in addition, I have asked the corporation to identify ways in which commercial banks can potentially support the objective of improved development financing. The IDC will need to enhance its response to the recovery of the South African economy by steering long-term industrialization, by driving inclusive growth, and by ensuring that it has a strong counter-cyclical role. It will seek to further integrate across the DTIC entities in executing joint key performance indicators we've set for the DTIC and all of the institutions like the IDC, the National Empowerment Fund, and the other entities. 3 broad goals. They are to boost industrialization, to support transformation, and to promote a capable and agile state that can implement what it indicates it will do. In this regard, the IDC must build a more effective internal capacity and ensure that its operating costs match the level of activity of the corporation. Costs cannot grow when the corporation is not performing to the metrics that we set prior to the pandemic. To ensure job-rich industrialization, the corporation will need to assist in the acceleration of various industry master plans, support township economies, and I want to recognize and do what I'm told is a shout out for the IDC's work with the Gauteng province. It's a pilot project that based on its experience, we can see how we can roll out to more areas, and also the IDC's embracing of social employment measures. It's successfully pitched to get money from outside sources within government that it can help to administer. It is also necessary to promote deeper localization by investing in local industrial capacity. Given the current energy challenges, the IDC can support efforts such as enabling the development of a strong and commercially viable local component base for the renewable energy independent power producer procurement program. Excuse me, and for the Green Hydrogen Action Plan, which seeks to diversify the country's energy generation mix. The IDC has done really well in boosting investment in green energy generation. It's one of its proud points. It acted ahead of the market when there was still caution by many commercial banks. The IDC stepped in and helped to create that market. It must now step in and help to build all the supportive industrial activities that can ensure that South Africa gets a high return, high jobs and industrial return from our investment in green energy. The IDC is also well placed to contribute to the transition to electric vehicles, enabling a more sustainable future for a critical part of South Africa's manufacturing base. The African Continental Free Trade Area and the new focus on building more resilient supply chains, and this is a focus by global businesses and by local businesses, all open new opportunities for the IDC, and I urge the IDC to seize these with vigor. I want to compliment the IDC on the efforts it is making to leverage and to manage funding from other public entities so that it enhances the impact of its work further. As we build the infrastructure of support that the IDC needs for its core activities, it can leverage off that to do other work. But in doing so, we've got to focus on the metric of how are we doing with industrialization, with increasing South Africa's output of value-added products. The IDC's governance systems remain strong, and so I'd like to thank the chairperson, Busi Mabuza, and the board of the IDC, and I'd like to appreciate the work of TP Nchocho, the management team and the staff of the IDC in working with the board in realizing the contribution to the performance of the corporation. We expect even more from the IDC in the current financial year, and I wish the board and the staff every success in carrying out that mandate. Thank you, Chairperson.
Thank you, Minister, for your opening remarks, but commentary overall on not only the expectations of the IDC, but I think the role of partnerships, leveraging these partnerships effectively to support government priorities, but also the execution of the corporate plan. And I know, Minister, if we have you later on for our question and answer session, there will be a few more questions specifically around the policy environment, but all the guidance that you've given us, but also ensuring that the IDC complements government's broader drive. At this point, ladies and gentlemen, it is my pleasure to invite the CEO of the IDC, TP Nchocho, to take us through the operational review and performance of the corporation. Over to you, TP.
Thank you very much, Tsepo, Program Director. Let me start by greeting Minister Patel. Say thank you very much for gracing the occasion today. The Chairperson of the Board, Busi Mabuza, and members of the Board who are listening to this broadcast. My colleagues, members of the executive and the management team who are here, and the colleagues from the DTIC, ladies and gentlemen, thank you very much for your attendance. I will give hopefully what is a brief overview regarding the operational context in which we operated over the past financial year. I think the meat of the issues really will be covered by my colleague, the CFO, who will go through the numbers. So, to the Chairperson, the Minister, thank you very much for your opening remarks. So, ladies and gentlemen, if I may just start off by saying that we have come to characterize this year that we are reporting on as a year during which we recovered and we relaunched significantly the operations of the IDC. We are all aware of the impacts in the prior year, 2020, and the fact that all the plans that we had in the years before really were tempered with, to say the least, by the events of COVID in 2020. But for the year that we are reporting, the important thing is to remember that our focus really remained on the core strategic focus areas of the organization, i.e. promoting industrialization, strengthening the finances of the organization so that we have the firepower to do more, continuing to embrace transformation and building an inclusive economy, as well as placing a lot of emphasis on proactively building our pipeline of projects. Indeed, the point that was mentioned a few minutes ago by the Minister in terms of a stronger alignment of our activities with the policy departments, not only the DTIC, but government generally. So The chairperson earlier on touched on the macro environment in terms of the economy and so on, so I won't go into that detail. Safe to say, as the minister has underlined, there is an imperative to continue augmenting, strengthening, enhancing the level of capital investment into the economy in order not only to create capacity, but create the social platform for employment creation. So let me move on to look at the numbers quickly, and I won't repeat the numbers that have already been mentioned. Safe to say that the key message here is about the recovery that we saw and the relaunching of the organization strongly into the year that we are reporting in. And we are seeing the same trend carrying through into the current financial year. So we are confident that we will do even better in the current financial year. What happens with our disbursements is that there are significant number of projects that have been approved, but they disburse on a multi-year basis because they follow an implementation construction schedule of a project. So we might approve a 1.5 billion rand in any given year, but it gets drawn over maybe 2 years, or in certain instances 2.5 years or so. So that carry-through momentum is coming through. As the CFO will report, the organization continues to be profitable, significant levels of profitability that is important for the well-being of the IDC. As I say, and I like to say, the organization requires the firepower to be able to live up to its mandate, and that firepower resides, yes, in the strength of its balance sheet, but also in the strength and quality of its people. So these are the numbers, colleagues, that you will familiarize yourself with in the media statements that we will issue. So, as indicated there, the levels of approvals, improvements in performance, the CFO will cover the positive trends that have emerged in some of our major subsidiaries. The Small Enterprise Funding Agency recording a marginal profit, but one of our industrial enterprises, Fosco, turning EBITDA positive performance for this past financial year, and indeed narrowing its losses significantly. And we are in a good position as an organization in terms of our liquidity position, as well as the capital structure as reflected in the debt to equity ratio. The numbers that follow here, colleagues, are important, and the chairperson touched on that, and I just want to overlay that, repeating a message really to say, for us as an organization, it is not only about the numbers, but it is about the development impact outcomes that come from these numbers. And so in this particular slide, we are reflecting on the advances or investment approvals that we made towards companies that are owned by black people, companies whose shareholding is significant in terms of women ownership, as well as young people. We keep a very close eye on this imperative of building an inclusive economy. Yes, reference was made earlier on to the work that we did on post-unrest business recovery. Indeed, it was a great intervention, and as was indicated by Minister, we are picking up the lessons learned in terms of process efficiencies to continue to make ourselves a better organization. This particular map is always an interesting one because it makes for interesting reading in terms of where the money goes that the IDC approves in terms of spatial distribution. And yes, there is always a tendency for the main economic hubs of the country to attract more investment. I think the Gauteng number, 5.2 billion, is a little bit misleading because there's approximately 2 billion included in there, which were infrastructure assets which really serve a national agenda, not necessarily in Gauteng only. But we keep a close eye on this because it is important, the issue of spatial equity, as we have come to refer to it. And then the graph on the right-hand side is also one of those extremely important indicators of our development impact work, because as it is indicated by the two bottom colors there, a substantial portion of our investments going into projects that are of an expansionary nature as well as startups, because this is true development finance in a sense of increasing the size of the economic cake. And in terms of sectoral distribution, this particular slide makes for interesting reading. A substantial portion of approvals going into the metals and mining area, steel companies that we funded, economic infrastructure, these being in the area of logistics, as well as water infrastructure, bulk water systems, as well as investments in energy. The point we would like to make at the bottom of the slide there is that these particular sectors, mining, agro and services, indeed the small business channels through our regional offices have proven to have a higher job preservation index as well as the job creation impact. So just a couple of interesting transactions to share with. One was KEL Technologies, which is a technology meant for the processing of PGM, platinum group metals, and this particular project has been approved and it is going into implementation soon, with our partner being Sidibelo Platinum Mines in the Northwest. The other one in the automotive sector, a black-owned company which expanded its operations to supply components into major OEMs, and this particular expansion in East London in the Eastern Cape, a company called VM Auto. And also sharing with you the various work that we have done through our provincial channels. Remembering, colleagues, that we started in 2019 to begin to reform our provincial offices, not only to be information centers, but actually to be channels through which our small business financing activities are undertaken. And we are seeing tangible traction in that regard. These are just the headline numbers that we've already touched on, about R1 billion or so into a client in the logistics area, 1.3 billion to a client in the water sector, and the various transactions that we did in the energy sector. To the point that was made by the minister earlier on about funds that we manage on behalf of others, there's room for improvement here, somewhere in the order of 1.2 billion, which was disbursed money that we manage on behalf of other entities, including government departments. That complementarity and that leverage factor that was referred to earlier on. So, in conclusion, ladies and gentlemen, and I do want to give over to the CFO so that he can cover the numbers in detail. Indeed, we remain focused on the development mandate of the organization. We are expanding our reach and our footprint through partnerships both in the government sector, the private sector, as well as other financial institutions. And so it is a great achievement that our financial capability has become even stronger for this reporting year, FY 2022, and we stand even in a better position to deliver even strongly on the mandate of the Industrial Development Corporation. Thank you very much, and with that, I hand over back to you, Program Director.
Thank you, TP. And I think, just going through the numbers themselves, but more from the impact perspective, which is what you've covered in the presentation, and the support for spatial integration, which is a bit more critical. But looking at the growth of the small business division and its locality, the township economy and peripheral economies, how significant in going forward will this be, how will the IDC focus and start to ramp up that particular focus?
Excellent.
Thank you. If I may, without further delay, hand over to our Chief Financial Officer, Mr. Isaac Malevu, to take us through the financial performance of the corporation. Thank you.
Thank you very much, Program Director. Good morning, ladies and gentlemen. Good morning to our Honourable Minister, Mr. Patel. Good morning to our Chair of the Board, Ms. Mabuza. And good morning to board members. Good morning to our colleagues from DTIC and colleagues within the IDC. And thank you very much, everyone on the line who's joined us. We really appreciate this moment. It gives me pleasure to present the financial performance of the IDC, which you will note it's a robust financial performance based on well-timed strategy execution and supported by a rebound in our investments. We will be reporting a healthy earnings and a strong liquidity position. Our earnings are strong, our balance sheet is resilient, and our liquidity position is strong. On earnings, these were supported by significant growth in revenues. Our balance sheet was supported by an improved financial leverage on the back of reduced borrowings, also improved cash collections, and also dividends that we've received from our investments. We remain encouraged by our strong liquidity position, which enable us to support our corporate plan. In terms of financial matrices, as you will note that these indicate an improvement or an excellent set of results. Starting at the group level, our revenues are up 35% at 21.7 billion. Profit after tax is up at 6.3 billion from a loss of 33 million that was reported in the prior year. Total assets are up 21%. Reserves are up 33%. Borrowings are down at 37.5%. At a company level, our revenues are up 12.8 billion, up 33%. Profit after tax is 2.7 billion, down from the 3.3 billion we reported in the prior year. Cost to income ratio has improved to 20%. Our gearing ratio is at 34.5%, better than 51.4% we reported in the prior year. And impairments, as the CE alluded, are showing improvements at 36.1% compared to the 37.9% in the prior year. The drivers of our balance sheet, and I just want to give you some color in terms of what is driving the movement in our balance sheet. The growth in assets is driven by a significant appreciation in the value of investments, both listed and unlisted. The stronger capital structure is supported by an improved gearing on the back of reduced borrowings and pay down of debt. Our capital and reserves have improved on the back of a better asset valuations and profitability. With regards to growth in profits, our group earnings improved due to increased income from equity associated investments, especially those that are exposed in the resources sector. We also saw an improved operational and financial performance from some of our major subsidiaries, in particular Fosco. Just to give you some also color in terms of our revenues, which we are pleased that they surpassed pre-COVID-19 levels at 21.6 billion. The notable drivers is manufacturing income driven by Fosco and grinding media due to improved production and increase in selling prices. Dividend income from our listed investment, in particular the top three, Kumba, BHP, and also some of the from the unlisted, such as ASCISWE. They've boosted our revenues significantly. We remain encouraged that the effective collection interventions and the strong community fundamentals are expected to continue driving our revenues in the short term. With regards to the waterfall on how the group profit is made up, we thought it's important just to give you some color. The biggest driver really is the narrowing down of the losses from Fosco at 407 million. Grinding media reporting a profit of 40 million, CIFA 98 million. Cast product is currently under business rescue arrangement, and this is really to help it turn around. Associate income also improved from 1.2 billion to 4.4 billion. And that's driven largely by some of our investments, such as Mozal, ASizwe, Smart Union Resources. So all of those that I've mentioned contributed more than 1 billion in terms of attributable income. In terms of our increased capital and reduced gearing, we are pleased that debt-equity ratio has reduced to below pre-COVID-19 levels at 34.5%. That's really driven by reduced borrowings and an improvement in our equity reserves. In terms of our listed shares, just looking at the 5-year trend, again, the valuations of our listed shares exceeded pre-COVID-19 levels, sitting at 67.2 billion when compared to the prior year and the period preceding that. And that's largely driven by Kumba, Sasol, and BHP in terms of their recovery. The expected credit losses, which is really it's been something as management we've been trying very hard to manage down, and we're pleased that it has remained flat year on year in terms of the balance sheet at 20.8 billion and compared to 20.7 last year. Notable improvement is a non-performing loss ratio, which is down to 31.2% when compared to 40% in the prior year. And this is attributed to close monitoring of our collateral and managing the credit risk of our clients very closely. The income statement impact. The biggest driver are the write-offs, and I think I will spend a bit of time here. And the expected credit loss has been largely immaterial, but the write-offs were material. And that's largely driven by CIFA, whereby we wrote off 1.5 billion. And again, this is just an accounting treatment, the way we accounted when we were setting up CIFA as we set up a loan. Now that CIFA is being transferred to another ministry, we thought to enable a smooth transition, we have to write off this 1.5 billion. So if it wasn't for that, the write-offs would have been within comparable to the prior years. With regards to corporate governance, the IDC continues to remain strong in terms of corporate governance across the group. In terms of IFRS, we will be reporting that we have received an unqualified audit opinion for the financial year ended 31 March 2022. We continue to comply with the Johannesburg Stock Exchange debt listing requirements. With regards to PFMA, we are reporting an irregular expenditure, an increase in regular expenditure of 4.8 billion. The biggest part of this 4.8 billion is largely the industrial subsidiaries, such as Fosco, who contribute about 3.1 billion of the 4.8 billion. The IDC company contributed only 14 million rands. What we are doing with regards to the PFMA, we engage our colleagues at the National Treasury, and with the support of the Ministry of DTIC, we did receive an exemption on the PFMA for Fosco with regards to international purchases. We believe going forward, this will minimize or reduce the irregular expenditure. As for grinding media and cast products, we await regulatory approval, and we are optimistic that we will receive a favorable response with regards to these. On our debt maturity profile, we are encouraged that it is adequately spread out across tenures, and we have a robust liquidity management plan to be able to repay or settle these liabilities as they fall due. We are also encouraged that our sources of funding is diversified. As you can see, that is from various sources, and I want to take an opportunity at this point to thank you, our investors, lenders and funders who continue to support us in ensuring that we fulfill our mandate as the IDC and we keep our balance sheet as strong as it should be. We are also pleased with regards to the credit rating status of the IDC, that the IDC was upgraded to stable by both Moody's and Global Credit Rating Agency. We are very encouraged that this will help us, and this is a vote of confidence in terms of our balance sheet and the strength of our balance sheet. And going forward, it should enable us to be able to raise capital as needed. In conclusion, and as I summarize the financial highlights, we are very encouraged that the IDC at the group level and at the company level delivered a robust performance that is better than prior year and pre-COVID-19 levels. We are encouraged by the strong capital buffers and liquidity that will enable us as an organization to fund the corporate plan. A stable credit rating outlook should assist the IDC capital raising program. We are encouraged by the improved performance from our subsidiaries and also the associate companies. We will continue as management to focus on managing down impairments and non-performing loans. And before I hand over to our CE, I just want to acknowledge again our stakeholders and thank you all for your guidance and support and contribution. And I will then ask, maybe hand over back to the program director or to the CE for concluding remarks. Thank you.
Thank you, sir.
Thank you very much, CFO. So perhaps with your permission, Program Director, I can just make final concluding remarks as we edge towards the close of this presentation session. To say that indeed we live in volatile times, but indeed our priority focus remains on supporting economic recovery. Those priority areas around agriculture, processing and renewable energy, as well as infrastructure, and of course competitive manufacturing, as well as spatial equity and regional integration. These remain top of mind, top of priority in terms of where our energy and our efforts go. Operationally, we continue to invest not only in the skill sets, but technology and other systems improvements in the organization to make the organization a better functioning entity. Yes, there are these challenges to be responded to relating to climate change and just transition, and indeed the IDC is playing a very much a leading role in that regard, not only in terms of policy advisory work, but also in project planning and development as well as investments. So transformation continues to be at the center of everything that we do. We have said so in terms of building an inclusive economy and a socially coherent country. So the well-being of our staff members remains at the center of everything that we do. We are working in a hybrid format at the moment where partially we are at work and partially we are off-site. All this aimed at ensuring the continued health and well-being of the staff members of the IDC. The CFO has already touched on the financial sustainability points, so let me not repeat those. So, ladies and gentlemen, the green economy is a major issue that is on the horizon. In fact, it's not on the horizon, it's right here with us. The various projects that we are working with partners in green hydrogen, in new energy vehicles and so on, a pipeline somewhere in the order of 14 billion rand. Of course, these projects are in the early phases of development and will take some time to come to fruition. But this is what the IDC does best, and that is to do the heavy lifting in the early development cycles of projects. So an important area of focus for the organization going forward. So ladies and gentlemen, with these words, we would like to bring the presentation proceedings to a close at this point in time. And Program Director, I will hand back to you, I suppose, for a Q&A session. Thank you so very much, Sapo.
Thank you very much, TP, and thank you to the CFO, Chairperson, Ms. Mabuza, and the Minister for the comments and our presentations this morning. Ladies and gentlemen, we have reached the time for our question and answer session, so I'll just keep looking at the iPad for any questions that come through. Remember, it's on the top left-hand side where you can load your questions. But to kick us off, TP, and it's really just piggybacking on the last comments on the green economy and the designation and the role that the IDC has been accorded, but could you perhaps just paint a picture of the initial steps that the IDC has taken to play a leading role within the green economy, but also addressing some of the energy challenges that South Africa requires for effective industrialization? But if you could just give us a flavor, paint a picture of where we are and some of our thinking going forward.
Thank you very much, Tsepo. Yes, I mean, the starting point is the point that was made earlier on about already an existing green generation portfolio in excess of 14 billion rand that we already have from the earlier rounds of the IPP projects. But at the moment, yes, as the first work stream chairperson, minister, we continue to invest in energy generation on a renewable trajectory. The second thing is the early stage projects that we are doing with partners in the hydrogen economy. And between us and partners in the private sector, I'm sure members of the media and society at large have seen in the media projects such as the Priska one, a project such as Buchubei, the work that we are doing at Sasolburg here, a green hydrogen initiative there, as well as equipment manufacturing, which is based on green. We are looking at the steel environment, the possible recommissioning of some of the steel businesses that have been closed, but this time around on the back of green energy generation. So I touched on electric vehicles, I believe, as a trajectory. So yes, a lot of thought leadership work, but at a practical level, tangible projects that are in the early stage of project preparation and development.
Thank you very much. Thank you very much, TP. And our initial questions in the sequence, Lindani Vezi at Future Growth Asset Management for the CFO. The question reads, has the IDC fully released the expected credit losses raised during the onset of COVID? If not, when can we expect to see the release of these provisions?
Thank you, Tsep, and thanks to the colleague who raised a question.
Yep.
The answer is our policy is that in terms of those non-performing loans or loans that are sitting at stage 3, in terms of expected credit losses, we only release those or migrate those to stage 2 or 1 after 12 months. Now, to the extent that some of the sectors where we've experienced distress, such as tourism and services and manufacturing, we are seeing an improvement, but we are not at a stage where we can fully release those provisions. So we expect those provisions to be released in FY 2023 and FY 2024 as they go through the 12 months curing period that we've set ourselves as an organization.
Thank you very much. Thank you very much. And CEO, if I may, and it's really just to retain the CFO on the seat. The next question, this is from Nico Gampepe at ABSA CIB, was, will the IDC be looking to approach the debt capital markets to refinance some of the maturing debt?
Thank you very much, Nico. It's a very important question. Nico, our corporate plan has an ambitious disbursement plan, as the Honourable Minister has alluded. We certainly will be looking at our lenders and funders to help us with closing that funding gap where it exists. So certainly it's something that is part of our plans as part of managing the capital that we need to raise.
Thank you very much. And the next one, and I know Nico, and perhaps to the CEO, and as you spoke about sustainability, greening the economy, the follow-up question from Nico at ABSA was, does the IDC have plans to provide more detailed disclosure relating to ESG in its integrated report?
Certainly, yes. This is a matter that came up, I remember, at the board meeting in the 30th of August when we were considering the statements and the integrated report. So we do keep a close eye on the climate footprint of the various investments that we are exposed to. And as you can imagine, it's mining, it's the steel sector, the automotive sector. And so my colleague, the Chief Operating Officer, Joanne, is actually leading the work in this regard. Already at the level of investment evaluation, at the time when we make the investment, when we make an investment decision, environmental, social, and governance sustainability are factored fully into our due diligence process as well as the risk assessment of a project. I think where we are in the process of improving is exactly the reporting framework on an annual basis, combing and looking through the entire portfolio of the IDC in terms of its carbon footprint and reporting accordingly and monitoring the trends going forward. So yes, we are in the early stages of doing that, but the reporting system is maturing by the day and by the hour.
Thank you very much, TP. And Minister Patel, if I may, Terence Creamer with Creamer Media asks the Minister, question has the shareholder set specific approval and disbursement targets for the IDC with the current corporate plan? What specifically is what are the shareholders' expectations, especially in this phase of the energy transition?
Well, first, good morning to you, Terence. On the question of the approval and disbursement targets, in fact, I'm going to point you to the corporate plan of the IDC for this financial year, which of course would be the subject of the next annual report hereafter. We have set targets that are consistent with the medium-term framework that we've given the IDC. We can make that available, but our target broadly is to seek that a combination of measures, direct funding by the IDC, what the IDC can leverage by utilizing the resources of others, that all of that contributes very significantly to growth and to development. When the balance sheet was weak, the focus was on shifting more to what the IDC can do using its infrastructure and utilizing resources of others. As the balance sheet improves, we can find a careful and more appropriate balance between these two. I'm happy in the course of this Q&A, I'll pull it out quickly from the laptop to give you the targets for this financial year, which of course is different to the one for the financial year under consideration. As regards the green energy expectation or renewable energy expectation, let me first just recognize Malebo Mabichi-Thompson from the DTIC, who is also here. She's been doing work with the DG on this area. Our expectation is that South Africa has to find ways in which we can boost green industrialization. Though there are challenges in the short term in our own economy, though global players have paused many of their commitments and their implementation, the long-term trajectory of what we need to do is clear, and the urgency to do that is absolutely compelling. So what do we seek the IDC to do? The one area is the one that TP Nchocho has covered, which is the IDC has helped to create a market, a financing market around green energy generation, using in particular wind and solar, and I think there was one instance of small-scale hydro. We're now widening that to look at green hydrogen. This is really the energy source for the 21st century. There's still quite a bit of technological innovation that's required to bring the pricing consistent with competitor feedstock and technology, energy generation. But the IDC is now working on that, and they're chairing the green hydrogen panel that we had set up. The second area is to find an opportunity in electric vehicle production to help South Africa's auto sector that accounts, the economic multiplier of that sector is very significant, accounts for about 5% of the GDP, very significant number of jobs, highly concentrated in areas like the Eastern Cape, KwaZulu-Natal, and of course Gauteng in the Tshwane area. And so the IDC will have a stronger mandate to manage and support the industrial funding that's required for the transition to electric vehicle. The third area is to assist companies, including in hard-to-abate sectors like cement and steel, to make that transition and to do it in such a way that we don't destroy jobs or decrease or close down South Africa's industrial capability. And on new investments, to find ways in which the IDC can nudge and support greener elements to those investments, including by utilizing funding that can be available from global sources, global climate change sources. I should say that while South Africa has been bold in our own commitments at COP26, we still need to see a similar level of boldness by partner countries in making resources available. So those are areas that we will be looking at. Value chains are critical. The importance of building a component supply base is not only because we want industrialization, the jobs, the output, the investment boost to the economy, but also in an uncertain world, a volatile world, having more of that local supply base gives greater stability. We're going to have to build fast and be able to utilize components, and we need to maintain those assets over the life cycle. That's a great opportunity, and if we can stabilize that by having efficient, competitive component supply in South Africa, we achieve that. And of course, in the context of the African Continental Free Trade Area, I would be looking to the IDC to see how we can position South Africa as a significant driver of green industrialization, even on the continent. Thank you.
Thank you, Minister Patel. And to the CEO, and this is from David Mackay at Mining MX, and he asked if the CEO could provide details on the financial performance on the IDC stake in Kalahari Manganese, and whether there's been any progress in the discussions between the corporation and the company, and the IDC's own future involvement with that company.
Yes, we can do that. Kalahari Manganese, obviously a company that the IDC supported right from inception, and the IDC has walked several years along that path, and we know that operationally the company has not been in a good space over the past couple of years. That's common knowledge. So specific to the questions, there are a couple of things that can be mentioned. One, earlier this year, this calendar year, as a shareholder and as a partner to Kalahari, we granted consent for the company to move to owner mining operations. So they terminated the contract mining arrangement that was there, and they have since taken steps to enhance their own internal operations, boosting the management team and the technical teams at the mine in order to enhance productivity performance. However, the company still require certain levels of capital investment in order to improve plant and equipment. And in recent weeks, our professional teams have been in discussions with Kalahari regarding funding options in order to enable the company to have the capital it needs to provide for that enhanced equipment and plant to improve the efficiencies at the mines. Yes, the discussions regarding the company's obligations towards the IDC are still a subject of ongoing discussions. We are collectively trying to find solutions. We are in a constant contact with Kalahari as a company and a partner organization to the IDC. Thanks a lot.
Thank you, TP. And this I'll pose to the CFO. And this is from Sivanati Marara at APSA. The question is, what were the main drivers of the improvement in non-performing loans? What does the picture look like in investments or loans outside of South Africa?
Thanks, Sivanati. We have there's three approaches. The first one is to manage those clients, excuse me, where there are prospects that they can be cured and they can be supported to get back to their performance where they are able to repay the IDC's debt as it falls due. So those companies we have supported through value creation plans, which really have seen a significant improvement in their own performances. The second approach was to look at the collateral and the security we have over these clients. So we've revalued those security and collateral, and where we needed to support or augment that security, we've done so. And then the last approach is we've exited some of the clients where there were no prospects beyond liquidation or beyond supporting them, where we felt that they could be supported beyond that. So those we've exited and fully impaired those where we need to fully impair. In terms of how we thinking about managing these impairments going forward, we do believe that the plans we've put in place, i.e. clean, fix, and exit, are starting to bear fruit, and we are confident that going forward for FY 23-24, we should see the non-performing loans reducing even further and the impairments ratio reducing even further. Our target over the next 3 to 5 years is to reduce the impairments ratio to below 20%. Thank you.
Thank you, CFO. Much appreciated. And back to you, CEO. And this is from Nicholas Nudu at AFD. Is there a plan to address the concentration risk in the listed share portfolio, Sasol, Kumba, and BHP? There was talk of this diversification in 2020, but not sure what progress has been made in this regard.
Yes, that's an important question. As was shown by the CFO, a significant portion of the IDC's capital is held in those resources counters, indeed, that carry a measure of concentration and volatility risk. So I hope the colleague who asked the question will appreciate, and the rest of the audience, that over the past couple of years, let's say beginning 2020 all the way through to 2021, it would have been very difficult to implement significant portfolio adjustments in the middle of distresses across all sectors of the economy. So yes, that particular strategy framework around diversification is still on the table, but there was no way that over the past highly volatile periods of 2020 into 2021, one could have gone down a significant path of making substantial balance sheet adjustments. But the framework is there. It is acceptable to the board, and we are now threshing the finer details regarding how the actual implementation will unfold in the months ahead.
Thank you, CFO. CEO, thank you, TP, for that one. And Isaac, to you, this is Sita Philip at Rand Merchant Bank. who asks, you mentioned the significance of the performance of the investments on the balance sheet. Is the performance derived primarily locally or offshore?
Thanks, Sitha. Largely, our book is about 80% domestically and maybe 20% offshore. So the performance I'm referring to is largely domestic. We're still seeing, and I recognize there was a question in terms of our impairments with regards to those assets outside of South Africa. Those are mainly in the tourism and services sector. With the COVID restriction having been lifted and most countries starting to see a resurgence of visitors, tourists in particular, we believe that those investments will start turning around, and we should expect those impairments to start coming down, and also the financial performance of those investments to start to improve. We continue to support those investments as the IDC, given that our commitment is still to invest both domestically and outside South Africa. Thank you.
Thank you very much, Isaac. And ladies and gentlemen, please note we do have select IDC executives with us in the room, and I will scan the questions and pose to some of the subject matter specialists. But we had spoken, CEO, around the spatial distribution, and this is more specific question that I'm going to invite Joanne Bate, our Chief Operating Officer, to respond to. Joanne, the question from Godfrey Mokwena was, is it possible for the IDC to consider opening offices in Putadichaba in the Eastern Free State? The Lechabile Chamber of Commerce facilitates and helps a number of companies apply, but the 300-kilometer distance from where they are to the offices is something that would appreciate shortened. But are there immediate plans looking at our regional small business offerings? Are there immediate plans to start closing the gap and getting closer to our potential applicants?
Thank you. Thanks very much. Thank you for the question. The IDC, with us broadening the reach and the mandate of the regions to be small business finance hubs, has required us to look at how we can serve our clients more broadly within the provinces. We're very conscious of the digital opportunities that allow people greater access, and that is something we also are pursuing, along with the positioning of business development managers in order to cover these distances and ensure that clients have access to the IDC's products. We don't have any immediate plans to open additional offices. We do work very closely with both CIFA, CEDA and NEF to ensure that the reach is extended of both the IDC family the DTIC family of companies, as well as the small business unit. To the extent that there is a need identified and we see significant opportunity, we certainly would look at visiting that opportunity of establishing new offices, but nothing planned at this stage. Thanks.
Perfect.
On a lighter note, you did well to direct that question to Joanne, because Putadichaba is part of Thaba Mofutsanyana District Municipality, and that's where I grew up. And that's where I come from, and I still have a house there, so I would be heavily conflicted. Thank you.
All right. Perfect, and thank you very much for that, Joanne, and truly appreciate it. And the question really, and this is really for CFO, if I may invite you, because as the CFO really spoke about the non-performing loans, but the portfolio management, the turnaround in the IDC's portfolio with regards to business partners. We've seen a recovery in what's been presented. What measures has the IDC put in place to facilitate this recovery?
Maybe I should take that, because this is what the CFO was touching on, and that is that late in 2019, we framed a strategy which we call a portfolio value improvement strategy, where on a very deliberate basis, we took the entire portfolio and we classified and bucketed our exposures into one, categories where it was clear that we could grow the investments, improve the value, so implementing value improvement plans in partnership with the clients, very interventionist, advisory type into the businesses, sort of a private equity type model of managing risk of creating value. The second bucket was this one where we needed to undertake significant restructures and turnaround of businesses. And again, there it meant in some instances providing additional capital or providing guarantees so that these businesses could access capital from other sources, but clearly on the back of a decent turnaround plan. Then the last category of investments are those that we deliberately exited in various ways, either selling our positions out of those companies and so on and so on. So a combination of all these measures with a very heavy focus on, for instance, collections from our debt customers. It is these measures on a combined basis that are beginning to yield very, very, very positive fruits.
Thank you, CEO. And Kagiso Molabe Coronation fortuitously picked the opportunity for this energy challenge to ask a question that I will invite Reg to consider. Has the IDC considered, the growing risk that load shedding poses to the portfolio? But also, is there thinking around diversifying away from the heavy SA industry assets that require energy? But what are some of the interventions in the energy space, Reg, that the IDC has looked at and you're managing in your portfolio?
Yeah, thanks, Seppo. I think certainly load shedding keeps us awake. A significant part of our portion of our portfolio requires electricity, in particular base load. You can imagine manufacturing companies that we have. You can imagine aluminium, as well as the mining sector that we have. So we are investing. We are assisting such companies. We call it commercial and industrial private sector, with the lifting of threshold, for licensing as well as registration of such projects. We are indeed looking at that. It's a priority area for us. Not only to secure electricity for their operations, but to start greening their products. You will recall that as an export, a dominant or reliant company, our products need to be green so that they don't attract carbon tax in Europe, for example. So it's a dual approach, securing energy for their operations as well as greening the products for export. I think what you will see is that in our existing portfolio of just about 16 billion rands in energy, we're really looking to try and double that in the next couple of years to try and support the sector. We don't think that diversifying away from such heavy energy consumers is really prudent because they tend to create a lot of jobs. They tend to support a lot of jobs. So our duty is really to help them transition across different sectors. It could be mining, it could be manufacturing, it could be in the other hard-to-abate sectors such as steel and cement. Thank you.
Thank you, Reg. And while we're still with Kagiso Malebe with coordination, and it's to the CFO, can you talk to us through the restructured loans, how these are classified into stage 1, 2, and 3, and if interest on these loans has also been restructured?
Thanks, Kaiso. So in terms of stage 1 and stage 2, this is really where, to the CE's point, where we believe these are clients are performing and have prospects of doing well, even with or without support. Where we've noted a deterioration in the risk rating, for example, some of our clients who were impacted severely by the COVID-19, where some of their financial performance indicators were starting to show signs of distress, those will migrate to stage 2. But we do not leave it there. The very improvement plans we've put in place kick in to support those clients to migrate back to stage 1. Where the client is they are unable to repay us over 3 months or 90 days in terms of IFRS 9, we migrate those to stage 3. And when they stay in stage 3, we give them 12 months to cure before they can migrate back to stage 2 or stage 1. But again, it doesn't end there. When you're in stage 3, the value improvement plans also still kicks in to ensure that we support those clients who have prospect of really going back to stage 2 and stage 1, because ultimately our goal is to ensure that those clients are continue to provide jobs, continue to support the industries that they operate in, and lastly, they repay us our debt if they're debt clients, so that we can continue to have cash flows to support other business partners. I hope that answers the question. Thank you.
Thank you very much, Isaac. And as we wrap up our session, a compliment and a question to the Minister. A compliment to the, and this is from Dato Kevin Pather at CRH Africa Automotive Technologies. Congratulations to the CEO and the board of the IDC on a solid set of results during tough economic challenges and recovery. And Minister Patel, given that the automotive component sector needs technology transformation from combustion engines to clean energy, electric cars, etc., can we assume that the board of the IDC, inclusive of its representatives such as NACAM, so that, will there be sector-specific knowledge base at a broad level dedicated to ensuring that we're able to leverage on this momentum? Dato, I hope I have summarized your questions effectively, but it's really around to the Minister of whether, going forward, there is sufficient knowledge base to ensure that South Africa leverages in this new transition.
Well, first, thank you, and I'm happy that the question also came with a compliment to the IDC team. I'd like to start with the observation that the shift to renewable energy-driven economic activities is an enormous opportunity for South Africa. And given how important the internal combustion engine has been to our manufacturing sector and to our own industrialization, think about it. We are a major supplier of vehicles in the European Union and in the United Kingdom. We export about 40% of our vehicles to those key markets. We have enormous numbers of jobs lodged in that. It has to be that the IDC plays a key role in this. Some of it is in ideas, in bringing know-how and information to bear, and others is in funding. What the IDC has done now, it's begun with a number of projects to develop, among others, renewable energy storage capabilities. What the internal combustion engine was to a vehicle in the 20th century, it seems that storage technologies, battery and the various components and elements in battery and in the systems that integrate that power in a vehicle is going to be as important. So the IDC now has investment in the mining sector and in the beneficiation of South African raw materials in that value chain. Can more be done? Absolutely. And so while the IDC has an auto desk with staff that have some deep insight into the sector, I have no doubt that given the directive I've given the IDC, that they will be enhancing that capability internally. Of course, we would like to have some of the climate change funds supplementing what we can do at the national level in driving the transition from internal combustion engine to the new energy vehicles. By the way, The new energy vehicles would include, of course, electric vehicles, but we're also thinking long term around the fuel cell technologies, with South Africa's significant supply of the key catalyzers in the PGM group. So given all of that, I have no doubt that over the next number of years, the market will see great effort by the IDC staff and the board to grapple with how we can get that transition done as quickly as possible. I should indicate that the success of that drive is dependent on a strong balance sheet by the IDC. So what we've seen now is, in this period, we've tried to rebuild the balance sheet, strengthen it. We've benefited from a few tailwinds, like we were affected initially negatively by some headwinds. And just to give a sense of it, looking at the asset base of the IDC in 1999, it was worth, just call it 15 billion rand. That is roughly the amount of money the IDC in this last financial year has committed to projects. And that's only possible because we're growing the asset base, because it's the return from that asset base that's available as investable resources. Given the fiscal constraints, government has not recapitalized the IDC, so we need the IDC to do both things, to maintain a profitable portfolio and to utilize some of the resources that is generated from that portfolio to fund a greater level of development impact activities like the green industrialization. As these technologies mature, they begin to make money, they begin to enhance the balance sheet of the IDC, but in this early period, a lot of work needs to be done. I was asked earlier by Terence what the expectation is for the current financial year. If I can just perhaps briefly deal with that. In the corporate plan for the IDC for this year, we've set a target of funding off the IDC's own balance sheet of 20 billion rand, but we've also supplemented that with a target of managed funding that the IDC should seek to obtain from either public entities or private entities, where it utilizes its know-how to be able to implement and manage those funds, a further 3 billion. And increasingly, we're looking at how smart investment by the IDC can catalyze and unlock investment that is available in the private sector. And so the co-funding that we seek to have leveraged is just short of 20 billion. It's about 19 billion rand. So if the IDC is able to achieve all of this across all three fronts, the target would be just over 40 billion rand of investment flows that are facilitated. Not all of it directly off its balance sheet, as you would see, about just over half of that would be leveraged from monies that is not the IDC's own money, but it's the money of counterparties and the money of institutions on whose behalf the IDC finances that. It's really ensuring that the IDC can draw broadly on what it seeks to do. If I may make one comment on Putatichaba and examples like that, the industrial needs across the country is enormous. That represents a great opportunity, and very often the opportunities in a local area outside of a significant metropolitan area. We've got to go out there, chase those opportunities, help those South Africans to build successful businesses and see the returns coming in jobs, in growth, but also in return to the IDC with those loans being paid off, or if it's equity, with a return on equity. So that's important. And so while Joanne has given the answer on particularly Putatichaba, if I look at all the small towns and all the areas in South Africa, the different district municipalities, we're not going to be able to have an IDC office in all of them. But we need to have an IDC presence everywhere. And we would seek to do that by the IDC, the NEF, and the DTIC pooling their resources more smartly in future so they can leverage off each other's office and infrastructure capability. And then enhancing that further is to utilize digital technologies, and Joanne has pointed to that. The issue around digital technologies is not simply to say we're open for business, here's our website, you can apply. It's to have road shows, physical road shows, where we send personnel through to areas, not only to publicize what the IDC and the other institutions are doing, but with a hands-on approach where we can assist potential clients to fill in applications while the IDC team and the NEF team and the DTIC team and we'll reach out and work with other departments of government to have SARS and to have the small business entities there, so that we create these opportunities where local communities can access the resources that may be at the head office level, utilizing the interface that these roadshow staff can bring. And in the process, to also help assist local municipalities to know what the portals are, to know what the websites are, and to be able to assist local players. I think that we can invest much more, given the digital technologies, the ease now of using virtual conferencing facilities to enhance the impact at local areas. But it takes more than simply asserting that they're available. We've got to invest as the DTIC group in enabling local entrepreneurs or potential entrepreneurs to know how to access that. I think technology can be such a great help, and I'm looking forward to doing that. Finally, perhaps just to say that the IDC's asset base is now recovered to pre-COVID level. It's about 12% higher than it was in March 2019, which of course is, let's call it our pre-COVID metric that we've used. And that enhances the IDC's ability to do even more in this year and in the next financial year. Thank you. Thank you.
Thank you, Minister Patel. And Joanne, I'm going to invite you to consider these questions, and Zifa and Zibande at Contrarians lead with a compliment to TP, the board, and the management team on the sterling performance. Thank you, Zifa. Truly appreciate it. Joanne, can the IDC provide a breakdown on how much of its book is dedicated towards project preparation of projects that are near completion of bankable feasibility studies in order to fulfill the infrastructure gap?
Thank you very much. The project development funding for pre-feasibility is a significantly smaller proportion than the assets we would invest in. So there was a mention of 14 billion rand of assets. The pre-feasibility costs of those are probably less than 10% of those pre-feasibility costs. What we budget about 50 million rand a year in project development for early stage project development expenses. And once it gets through the pre-feasibility stage and starts moving towards bankable feasibility, an investment decision can then be made, which then would go to the credit committee and would not be a project development expense. We have well over 40 projects that are currently in development at various stages through the project development life cycle. And we see that as a critical feeder into our investment pipeline for the future. A number of these projects are sitting in the green economy. We've mentioned the green hydrogen, some infrastructure and other early enablers in the battery mineral value chain from a new energy vehicle perspective, and various other projects across the key industrial sectors. Thank you.
Thank you very much, Joanne. And Lindani Vezi at Future Growth has come back, and this is to the CFO. Noting the comments from the leadership on the transition to greener projects, will the IDC consider issuing green bonds?
Thank you, Lindani. So, Lindani, yes, so what we're currently doing, we're working on a sustainability a bond framework. So it's a framework that enables us to issue green bonds, social bonds, any of the bonds that talks to the sustainability goals. So that's something that we should be able to conclude in the current year, if not certainly in FY 2020, for the year end FY 2024. We see that as an opportunity for us to get cheap sources of funding or reasonable sources of fund at a reasonable cost, but we also see that as something very important to our developmental mandate. So we are certainly looking to that. Thank you.
Thank you very much. And we have no other questions on the platform, but I would be remiss to not pose the question to the Minister before I get to the CEO. And Minister, and thank you for the shout out, as you said, on the work with the Gauteng economic development and the propeller. But from a policy perspective, the role of funding township economies and how going forward, and what's the significance of that direction, from an economic inclusivity perspective?
Well, thank you. Excuse me. Can I start by saying that there's a growth story before we even come to the economic inclusion story? There are young South Africans in townships with energy, with enterprise. When I talk to them, when I see some of the things that they do in informal sector activities, I see that we have not yet been able to find ways in which that enterprise can be brought to market. In the United States, for example, or in China, you find two very different economies, but they're able to find efficient ways in which they get local entrepreneurs to bring their ideas to market and to expand those. So let me start with that economic argument that if we're able to unlock more economic opportunity at township level, we grow the economy and we grow jobs. Let me come then to the inclusion one. The World Bank has done some work which it publicized a few years back, which was entitled South Africa, an Incomplete Transition. And in that work, what they pointed to is the fact that the concentrated nature of our economy has a growth cost, a employment cost, and a poverty reduction cost to the society. And so economic inclusion is one of the areas that we focused on. Our competition law is really driven to find more opportunities. But as I indicated in my remarks earlier, the competition authorities on their own are not going to be able to achieve this. So what the IDC has done with the township pilot is really seeing how we can ensure that young entrepreneurs, township industrialists and small businesses who have great ideas will not have a shortage of capital to back them and to support them. And so that's really the opportunity. In addition to that, there may well be a very interesting spatial dividend that we get. When you look at the cost structure in South Africa, for an ordinary worker in the formal sector, transport accounts for an extraordinary percentage of the wage or the salary that an employee earns. And it is the legacy of the spatial patterns of the past where workers were housed in a township that was a distance away from the commercial and often the industrial hubs of the country, and commuting was the way to address that. Now, what that means is it drives up the total labor cost of the society, because every day people have to get up very early in the morning, take expensive transport to get to work, and then do the journey back. When we are able to locate more economic activities closer to where people live, if we follow a pattern that we've seen all over the world, that yes, you have industrial areas, you have big commercial areas, but you also have a much stronger organic set of economic activities closer to where large numbers of people live, we're able to reduce travel time, travel cost, and the productivity of labor. Imagine a woman in the clothing industry or a male in the steel industry spending an hour and a half, sometimes 2 hours to get to work, and then have to do a full shift. So I think what the township economy initiative does, it presses all those buttons. It provides an opportunity across multiple fronts. But in doing so, we know that given that this has not been a significant focus, a sufficient focus in the past, we are going to need to learn what are some of the pitfalls, some of the challenges, and doing this project on pilot level in partnership with Gauteng and Premier Makura has been a very strong champion of this project, gives us that learnings that can be rolled out in other parts of the country based on the experience that we're getting. I see this as part of what the IDC is doing, which is to say, how can each billion rand unlock a lot more return on jobs, output, and economic inclusion. Thank you.
Thank you very much. Thank you, Minister. And the one question from Joe Motene at the Limpopo Department of Economic Development, and I will direct this to Joanne. What are some of the key projects and their values? What are the key projects that IDC has funded in Limpopo and their key values? I know in slide 13 we did talk about our focus on spatial distribution, but if you could provide some color to that question, please.
Thank you very much. The approvals in Limpopo are cross-sectoral. We have a number in the tourism space, in agriculture, some small business transactions, which obviously would contribute from a developmental perspective, but not significantly to value. And then some really large or some reasonably large transactions within the mining space. One particularly large mining transaction in the region is focused on creating a significant number of jobs over the next number of years. From an IDC development perspective, what we look at when we're partnering with companies in large developments is how we can ensure that there's downstream support for small businesses and value chain development in parallel with that. So we do expect the mining transactions to have significant broader benefit on manufacturing and regional and spatial development as we support our mining partners in developing their value chains within the province. Thank you.
Thank you very much, Joanne. And as we bring the session to a close, TP, the question is really to you. In your discussions with the board, with the management team and employees of the IDC, with a thorough and solid appreciation of the IDC's mandate, what is the one common issue? What is the thread that runs across these conversations, but what also, keeps you motivated to deliver as a collective?
The running thread for me really is the sense of mission of what we do. Ours are not just jobs, but a call to progressively improve quality of life of the South African nation and probably the broader African continent. It requires that periodically we remind ourselves of that ultimate purpose. So when everything else is said and done, yes, the transactions are what we do every day, the policy improvements, the systems improvements, but what keeps me going is the ultimate, and that ultimate being a progressive improvement in the quality of life of societies that we serve in, and maintaining and hopefully contributing to the viability of a nation called South Africa and a continent called Africa. Thanks a lot.
Thank you very much. Ladies and gentlemen, thank you for joining us this morning on a Monday morning. but hoping that the presentation has given you a lot of flavor and details on the performance of the Industrial Development Corporation for the year ended 31 March. This really comes and concludes our session. But on behalf of the IDC, I not only thank you, but I thank our panel members, Minister Patel for the guidance, to the chairperson, not only for your active guidance, but working with the management team, thank you. To TP, CEO and the management team, thank you for making yourselves available and interacting with our stakeholders, and hoping that in the coming days, as the numbers get unpacked, we can, any questions that you may have, can fill through media relations at IDC, alternatively with direct engagement with our executives. With that, all the best for the day ahead and the week. Bye-bye.